This message is about FICO score damage, mortgage modifications, and FICO score damage. Our credit scores have become much more than simply a financial reward for prudent use of credit. With the information explosion of the last 25 years, credit scores have actually become a measuring stick used by prospective employers, insurers, private investigators, marketers, and lenders of all type. Further, during the economic run-up of the past 7 years, a person's FICO score has really become a status symbol of the new real estate wealthy class. And so it's with great trepidation that many of us face the untenable prospect of trashing our good credit standing by missing payments as part of a real estate workout. But tough times require tough decisions by tough people like all of us, and like in any impending emergency, we can minimize the damage and speed the recovery by understanding it and preparing for it. Specifically, you should know how the credit rating system works. Number 2, how much damage will be done by your mortgage late payments. And you should have street smart ways at hand to minimize the damage and street smart ways to speed your recovery. Now, most of my clients miss 3 to 5 mortgage payments in the course of a loan mod, and most suffer at least a 100 to 150 point FICO decline. That's not fun, it's not financially rewarding, it's not something to be proud of, but, well, you know how I feel about these things. The FICO scoring formula is a predictor of future credit performance. It's not meant to be a reward or a punishment, but rather to predict the likelihood that you will pay your bill or not pay your bills over the next few years, based solely on the information in a credit report. It is therefore complex, it's difficult to assess, and it's a carefully guarded secret. But when looking at late payments, the FICO scoring formula we know considers the information on a credit report by recency, severity, and frequency. Now, in your default situation with a loan mod or a short sale, you cannot control the severity, the mortgage lates, because mortgage lates are very severe. And the frequency really depends on how fast your lender responds with your workout proposal. Recency then is really the only issue that you can focus on. That is, delay the credit damage as long as possible and get it over with as quickly as possible so that you can put that period of time behind you. What I call the 7 credit repair best practices will help you to recover even faster. These are measures that should become part of your ongoing financial management. And the first one is that's never make a late payment again. But you got to take this one really seriously and figure out how to get all your payments in on time every time. End of sentence. You just have to do it. The second one is never close any credit account and use all of your accounts. You'll not improve your credit score by avoiding the use of credit. Don't let any accounts lie dormant, even if you have to go to Sears to buy things like laundry detergent using their card. The third one is I want you to open accounts only after carefully evaluating specific smart purposes. You may, if you have fewer than 4 cards, want to open a new credit card just to raise your total available credit limit. Having more than 4 cards, though, is not advisable. Number 4 is constantly apply for higher credit limits with the existing accounts. Use only a low portion of your available credit. Number 5 is make payments on every account twice per month, because you get FICO benefits, you see, by making your payment and by paying your required amount each month. The 6th one is pay down your non-secured accounts, like your credit cards, to below 30% of their available balance and then keep them there. Don't ever let them get over 30% again. It's the very best use of the money that you save from missing those mortgage payments. Get your balances low. And the 7th one is hire a reputable credit management company to dispute your credit report negatives. Please don't even think of doing this yourself. I know it flies in the face of my usual do-it-yourself mantra. However, my experience is that this process, disputing all the negatives, is an essential part of credit repair, number 1. And number 2, it's way beyond the ability, patience, and capacity of mere mortals. I have never had a client succeed in removing all that they needed to from their credit report, even when they use the online dispute services offered by the 3 bureaus. It is costly to use a credit management company, but it's really well worth it. Now, if you will implement these 7 practices, you will fully recover from any FICO reduction in 6 to 24 months. Track your progress by checking your FICO score at fairisaac.com. It costs about $15. Expect it to take at least 6 months for significant progress. And for more information on loan workouts and on your FICO score, go to 60minuteloanmodification.com. Order my free CD called 60-Minute Loan Modification Secrets. Thanks.